You put your paycheck into your savings account or even a high interest savings account. A month goes by or two, you check the balance and it's barely moved because you're earning almost nothing in interest. It feels unfair and you're upset. I actually have a high interest savings account with one of the big six banks. It's my emergency fund, and I've been noticing that it's barely moving. I'm hardly earning any interest, so I feel your pain. Let's be honest. People aren't failing at savings. They're failing at where they're keeping their savings because legacy banks are offering very, very low interest rates, next to almost nothing compared to some of the online banks that are currently offering much better rates and promotions. Imagine your emergency fund actually earning a decent amount of interest, 2 to 3%, sometimes even 4%, compared to almost nothing with those big six banks. And you'll be absolutely shocked, as I was, when I show you just what you actually are probably earning if you have your investment in one of these big six banks. You ever notice when you sign up for one of their promotional offers and you look 6 months later and that high interest rate that they were once promoting that you thought you're always going to get is gone and replaced with a much, much lower rate? By the end of this video, you'll understand where else you can go that are CDIC backed banks in Canada to park your money aside from the big six legacy banks. You'll understand how to read the promotional offers and rates that you see on websites so it's not all gibberish. And you'll understand, so you don't get burnt, how to move from one bank to another and get the best return on your investment and savings. One place to check out is EQ Bank's personal account, advertised at a rate of 2.75%. This bank is CDIC protected, and it's a very well-known, reputable bank. Another option is Neo Online Bank, which offers base and tier rates at 2.25% and 2.9% respectively, and Neo advertises that they are also CDIC backed. They offer CDIC protection via their banking partners. Rates do change, however, so view these rates as live targets rather than permanent guarantees. Wealthsimple's cash/checkings account is another viable option, as they're always offering promotional rates and guarantee up to, as advertised, $1 million in deposits. Aggregate coverage, splitting funds across partners. This is great and convenient and offers extra coverage. However, as of early November, the rates were only 1.25 for their checking account, which isn't the highest, but it's something to think about. Oaken, by contrast, is a great alternative option and one of my top recommendations. It's built specifically to offer stronger savings yields. Oaken's online savings and TFSA rates were around 2.8%, and their GICs, for example, a one-year GIC, was around 3.4% as of November 26, 2025. And Oaken's deposits are issued through Home Trust/Home Bank, both CDIC members, so you get higher ongoing yields while keeping CDIC protection. And like I said, online banks such as Wealthsimple are continually having promotional offers to get you to set up a new account. So keep an eye out. Currently, they have a promotional offer of an iPhone 17, but you have to move $100,000 or more and set up a new account. Chances are you don't have that kind of money, but it's something to think about. Now, if you go onto a website such as RBC, you'll see usually 4 columns. This has high interest, enhanced savings, day-to-day savings, and US savings. I'll explain exactly what each of these mean. Use high interest savings if you want the best online rates for an emergency fund and don't need frequent branch access. Use enhanced savings if you keep larger balances and want higher tiered rates once you hit the thresholds. Use day-to-day savings if you need simple, frequent access and aren't chasing top rates. Use US high interest e-savings if you regularly hold or spend US dollars and want to avoid FX conversion. So you'll notice if you look, the monthly fee is free and you're allowed one withdrawal or debit per month while you have this account. Otherwise, you'll be charged. You'll see that the currency is Canadian except for the US account, and you'll notice that the interest rate, at least for the high interest account, is 0.55% and the US account is 0.25%. The other accounts say tiered. What does this mean? So if we click on tiered and look at the breakdown of the interest rates, if you have, say, $9,000 in enhanced savings, you actually earn 0.001% interest, like basically nothing. You're not earning anything, I would say. So don't be fooled by enhanced savings terms, as you're not getting anything for your investment or savings. So this is how the tier system operates, much like tax brackets. So once you hit $5,000 in savings, you move up from zero interest to a very low interest rate. Then once you hit $10,000, you move up to the next interest rate, $25,000, and so forth. You continue climbing and your interest rate gets very, very slightly better. In case you're new to my channel, I'm Aaron, a 20-year corporate accountant and analyst living in Western Canada. I talk about personal finance, investing, and investment portfolios. Subscribing to my channel won't get you financial freedom that many other content creators promise. However, if you want transparent, honest, informative, and I hope entertaining videos on those various subjects, consider subscribing to my channel. Some things to keep note of: don't treat your interest as a fixed return, such as a GIC, as it's always floating. Your interest rate will change. I noticed this because I went on to Google and said, how do I find my interest rate? Don't always listen to Google, because it said, oh, it's available on your statement. I looked at my statement and I couldn't find my interest rate anywhere. However, I did see a small amount of interest on there. It was like $9. And it said, oh, this is because interest rates change. So it may list the amount that you've earned in interest on your statement. Otherwise, you'll probably have to dig through your online profile to find what your interest rate is, as it won't always be listed on your statement. If you don't see your interest rate or any interest earned on your statement, chances are you're not earning anything in interest, that it's so low that it's not even being calculated. Discouraging, huh? That you have $5,000 to maybe $10,000 set aside in a bank and you think it's working for you and it's really doing nothing. One option I would say is pay attention to the tiers, because you can earn a slightly higher interest rate depending on how much you have saved or invested in a certain account. Also, consider splitting the accounts, moving some into one type of account so you have easy, quick access, and the other portion into another account with possibly a different interest rate. RBC, for example, calculates interest as an annual simple rate, computes interest daily on your closing balance, and it pays it monthly. And the rate is subject to change without notice. That's why dates matter when you quote a rate. So all of these rates are as of around November 2025, so don't hold me to this months later, as rates will often change month to month. Also, be mindful of promotional rates offered by the big six banks. I was offered a great 4.6% promotional rate to move and keep my money in with one of the big six banks, but after 3 months I noticed that rate dropped to 0.55%. So now, while the banks figure, well, we have your money, chances are you're not going to go through the hassle to move that money out, so we're going to drop the rate. The banks just want to get you in the door, have you set up a new account, bring over your money, and chances are they figure, well, you're going to leave it there and you're not going to go through the hassle to move it to another bank. So after 3 to 6 months, they usually drop that promotional rate. So check your bank statements to see what you're currently earning. It might be less than you think. The RBC rates that I showed you were as of November 26, 2025. Also, pay attention to the withdrawal fees, because often banks will only allow 1 to 2 withdrawals per month free of charge. So people are just using their card 5, 6, 7 times a month and not realizing that each time they do, they're being charged an additional fee. Tangerine and Simplii are currently offering promotional rates as of this video at 4.5%. which is possibly a great place to park your cash temporarily while you figure out which bank you want to go with. One strategy you might want to consider is opening up set tier GICs with different term deposit lengths. So if you need the cash quickly for, say, an emergency fund, yeah, a high interest savings account is the place to go. However, if you feel comfortable stacking it into tiers, having $3,000 in this account, then say $3,000 in a GIC term deposit of 3 to 12 months, that's something to also consider. However, you do pay a penalty if you break that GIC, so keep that in mind. Like I said, one thing to make sure of is that they are CDIC protected or insured. One of the best ways is to look for the logo on the bank's online website, or two, an even better option is to actually go to the CIDC website, type in the name of the branch, and look for them here. I'll put up the visual that I found on all the listed banks. Keep in mind that some of these banks have parent companies, so don't panic right away if you don't see your bank on here, because they're under perhaps the parent company. The pros and cons of online banks. Online banks generally offer higher interest rates and lower fees because they have fewer branches and lower overhead, which benefits savers. However, they have slower in-branch services, obviously, and sometimes slower Interact e-transfer limits or customer service queries. So they trade convenience and relationship banking for better yield. Rate comparisons on sites like RateHub and NerdWallet make it easy to find top current offers, but these lists change quickly, so always recheck the date. Some online institutions, such as Wealthsimple, aren't banks in the traditional sense, but they hold the cash and your investment in various CDIC member institutions and have legal disclaimers about how we keep your money safe. Promotional offers are very tempting, but always read the fine print and be aware of the dates you invested, as the promotional offers, like I said, will often end after 3 to 6 months. So if you're organized, you can park your money there temporarily and get that great promotional rate, but then be prepared to move that money to another online institution once that promotional rate ends. Who pays the highest ongoing rates? As of November 26, 2025, a snapshot. Oaken at 2.8% and EQ Bank at 2.75%, including bonus interest, sit among the top ongoing everyday registered savings rates listed on provider sites, with Neo commonly showing base rates of 2.25% and top-tier links up to 2.9% at times. These are higher regular yields for everyday access cash accounts right now. Promotional leaders, short-term window. For short-term new customer promos, Tangerine and Simplii were offering 4.5% promotional rates for a limited period. For example, 153 days/5 months is Tangerine's TNC. For fun, let's look at that RBC tier and say we invested $1,000. What would we earn in interest over a year? Okay, looking at the data and crunching the numbers, we earned basically nothing. Okay, let's bump that up. Let's say we have $5,000 and we invest in an RBC. What is the calculation then? Maybe $1 to $2 over a year that we earn in interest. Okay, now let's bump it up even more. Let's say we invested $15,000 and put it into the high interest savings account. What would we earn in interest? Well, at 0.55%, we would earn $83 about over a year. $83 in interest with a $15,000 investment. Doesn't that just get you? Like not even 1%. So we're basically earning nothing. We're losing to inflation. So really consider where you want to park your money. Now say it was in a high interest savings account at 4.5%, how much would we earn in interest on $15,000? $675. So that's roughly $580 more in interest. Now, that doesn't sound like a lot, right? In 1 year, okay, $580, but times that by 10, and that's $5,800. And don't forget about the miracle of compound interest. Interest building on top of interest. So over time, if you plan to keep that money in that account for a long time, those small amounts in percentages really add up. So in summary, it depends on the account. So a high interest savings account is 0.55 to 0.65%. Well, that makes a huge difference from the enhanced savings plan where you're basically earning nothing in interest. Your money is just basically sitting there doing nothing.
How to move or switch banks. To switch from your old bank, you simply link your new bank account to your old one, verify it, and then move the money over electronically through an online transfer. Once your accounts are linked, the actual transfer usually takes 1 to 2 business days to show up in the new bank.
So some key takeaways are, remember that if it's not a GIC and it's just in a normal savings account, these rates fluctuate continuously and often without notice as the bank responds to market conditions and the Bank of Canada's interest rates. In order to qualify for the top rate, there are minimum thresholds and requirements, such as certain accounts will require that you keep a minimum balance in that account at all times. Otherwise, you'll be penalized. Online banks such as Neo Financial's bank operate on tier rates, so it depends how much money you have invested. If you keep investing more money, you'll often get bumped up to another rate, as we saw in the RBC example. So pay attention to if your balance is changing or particularly increasing. And finally, like I said, the promo rates, these will change over time, like it did with me. So watch that and consider moving your money to another bank once that promotional offer ends. Remember, banks are there to make money off of you. They'll offer you the lowest rate that they can get away with while they loan it out to other customers at a higher rate. So always keep this in mind. And the worst thing you can do is be oblivious about your finances.
You're a very smart guy. This is a very dumb thing to do.
Because you'll probably assume, like many people do, well, I have a ton of money sitting in my bank. quietly working in the background, and then you look at the numbers and realize it's generating almost nothing for you, and you get disappointed and feel frustrated. Please pay attention to those percentages, as a small change in percentage can really add up over time. If you're interested in more videos about personal finance and investing, here are 2 great videos you should check out.